Hey, it's Michael Saul, but everybody calls me Tiny, and this video is, will we make it through this key line in the sand this time? This is stock market analysis for the week of July 9th, 2018. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com, put in your first name, your best email address, follow the instructions, confirm that it was you that put your information in, and you will receive intra-week updates from me. If you would like to join our Facebook group, it's www.facebook.com/groups/attackthemarkets. Answer 3 simple questions. Just promise not to be a jerk to other members, and you will be allowed access into the group. Both of these are free. If you like what you're hearing in this video, click subscribe and the bell to be notified of future videos, and give me a like. Okay, wow, made it through in 45 seconds. Now taking a lot of time explaining that I made it through in 45 seconds. Okay, took last week off because I really didn't have a good feel for what was going on. I sent an email out to those on the list, and I said, we could go down a little bit more. Maybe we want to come down and test the 200-day, or we could just turn it from here. I really didn't have a clear picture. It was a mid-holiday week. It was a midweek holiday, week, right? Because Tuesday was a half day, and then Wednesday was July 4th. Hope everybody had a wonderful Independence Day. And then the end of the week, we wound up pushing back up. So the line in the sand I'm talking about, and the title of this video is right here, the 78.6% retracement of this swing down, which got which provided some pretty good resistance. We churned there, and then we pulled back. This time, will we get through? Will the second mouse get the cheese? I think there's a good shot we will, but here's what I'm looking for. I'm looking for us to rally up, fall a little bit shy of it this time, and either pull back or consolidate, build up some power, and then bust through. I still believe the S&P 500 is going to new all-time highs, as I believe the Dow is also, even though the Dow is lagging. That's fine. Okay, the NASDAQ, I think they're headed back to all-time highs. They were just at highs and have pulled back from there. Same thing with the Russell, and same thing with the mid-caps. Let's take a look at the semiconductors. So the semiconductors are lagging a bit, not really holding the NASDAQ back, because the NASDAQ is rallying off of big tech. Let's look at some stocks. So here's ADI. Here's one to watch. Okay, it came up over 100, almost made it to 104, pulled back to the 50. Now I want to see, can it resolve and get back up and continue going, maybe head to the 106s. I have a target here if it can keep going. NVIDIA, NVIDIA was way hot. It's been cooling down as of late, but again, this one can put together something as well if it gets going. Here's Intel on the bounce. Also, KLA Tanker. Okay, it's bouncing as well, and it was really nice and strong. Took a nice pullback here, then it popped up to all-time highs, and now it's back here, and it's consolidating in this wide range. So for swing traders, it's great, because if you can time these swings, there's still some pretty nice chunky moves, but overall, there's no strong trend being asserted here. Let's look at the banks, okay? So the banks, a full week under the 200-day moving average. They're consolidating here. If they decide to go to the downside, then we really have to start paying attention here if the market, and seeing if the market can go without the banks. Now, of course, it can, and you can see here the banks barely got a bounce on Friday, but the S&P still rallied. But if we push down from here, look for hole number 100, and then look for these lows down here at 96.80 to be tested. Some key stocks, Bank of America, really not acting well. JP Morgan, Citigroup, just all under the key moving averages. A lot of people would call this I'm hesitant to call it a bear, but it is a 20% move off of the highs down to here. You gotta be careful here. Like I said, the market can rally without the financials, but can they get very far? Here's Goldman, if I could spell it right. It's only 2 letters there, Tiny. Also not acting well. Also pretty decently off the highs here. I don't think technically it's probably in bad territory at this point. But whatever it is, it's consolidating here at the lows. Here's the XBD. All right on the 200-day moving average. Stock like Morgan Stanley, also just really not acting well here. All right, Interactive Brokers, yeah, it was really nice at a beautiful bull flag, and then boom. Now this didn't fail; it just didn't work. But this is down more than 20% from its highs, and it's below the 200-day moving average. Are we now in a bear market here in this stock? Right? Got to pay attention to this because it's important. And why is it important? Is Interactive Brokers a bellwether? Probably not. But when stocks that were acting really strong, when stocks were acting nice and strong, and all of a sudden, oh, look at this, they're not acting so strong anymore, I start to pay attention to that. Biotechs, though, wow, they look like they're ready to push higher here. Look at some stocks here. You got Amgen. Yeah, look at this nice breakout of this sloppy consolidation. See if this can get back up to a high. Immunogen, yeah, just more sideways than moving. Here's Biogen, the big news-related pop there. Here's Gilead, right into the 200-day moving average. See if this pauses. This could be trying to make a move as well. Let's look at some of the glamour stocks. Amazon consolidating, right? This is one of the reasons why the NASDAQ's acting well, because while the semiconductors are lagging, big tech names like Amazon, consolidation. If it busts out here, look for 1800 to be tested. Here's Apple. That got off its butt on Friday. See if that gets continuation. The Facebook, wow, just headed up to highs. Yeah, privacy, no problems. Yeah, no. Came down to the middle of this range, which we highlighted back in March. Came down to it, held it, and then just took off from there. Just incredible. Here's Netflix, right? And then you got Alphabet. Hang on one second. Got to get the pizza out of the oven. Okay, so there's Alphabet going. Caterpillar. Let's look at Caterpillar and John Deere. Yeah, look at Caterpillar consolidating at the bottom of its channel here. I want to, and this isn't really a great channel anyway, but, I mean, it is a channel. It's considered one. But if this breaks down from here, you got it's basically at the gap fill. But you got a little bit more to the gap fill, and then down here you got 129.58. John Deere, also not out. And these were great stocks, acting really well for a while, but now they haven't fallen on hard times. They're just not looking as beautiful as they once did. Here's bonds. So bonds are starting to rally. A lot of people have been waiting for bonds to rally for a while. Here they go. They're starting to go. And what does that mean? When bonds rally, interest rates drop. Everybody was nervous about the interest rates, but now they're dropping as bonds are rallying here. Here's gold. Gold has fallen on hard times for sure. Down here, beautiful hold of the December 2017 lows. But if these give way, look for GLD to come down here and test the 114, the high 114 slash 115 handle, and then oil. So oil, which was looking weak, had a small W bottom and popped up into the highs here. But the July 4th time frame is a seasonal high. Okay, usually it does not all the time. Doesn't have to happen all the time. Okay, but there's a seasonal high usually around the July 4th holiday, which we just had last week. So perhaps the high could be in here. We do have a left shoulder. Maybe this forms ahead, and then we form another shoulder here. Right now, not looking to short this here. Just something to pay attention. I like to use seasonal tendencies as background. So let's wrap it up. It was a quick video this week, and that's what I wanted to do because I think that my message is pretty clear here. I believe we're going to get through these highs. So we either fall short of this, consolidate, and then barrel through, or an alternative is we get through right from here, but then we pause and we continue. I don't think we're going straight up to highs here, and I think this is going to cause a little bit of a stutter step, either before it or after it. But the consolidation before it will be a nice place to lay into positions, or right above it. Again, the wild card could be the banks. So far, hasn't really affected it. I mean, we did get a nice rally on Friday despite the banks acting like crap. But, yeah, I mean, the financials, it's not going to last forever that the financials are going to stay like this, okay? So, if the financials, stay this way as far as not having an effect on the broad market. If the financials get weak, it will likely drag down the broad market. Any questions, tiny@attackthemarkets.com. Don't forget to give me a like, subscribe, and hit the bell if you like what you're hearing. I will talk to you in the intra-week updates or in next week's video.